So I want to bring up a chart talking about the lows for the S&P as we just saw, and also those stocks with new 4-week lows. If you come inside the Bloomberg, what does that tell you about the direction of the market?
Well, I'll say this. During steep market declines, I think it's very important to focus on what the individual stock is doing, because often those individual stocks give you the first warning that the selling is about to start, but at the same time, it also gives you the first warning that a potential bottom is becoming closer and closer. And looking at, how many stocks in the S&P 500 traded at a 4-week low, kind of gives us a little bit more of an it kind of gets us a little, warm inside, because, the selling pressure by this gauge, a lot of it has already taken place. So if you look at October 11th, that was 2 weeks ago, market made new lows. 76% of the S&P 500 members made a new 4-week low. So that's basically 3 out of every 4 stocks made a 1-month low. By our measures, 60% is extreme, and that is washout conditions. So we far exceeded that. Now, what happened yesterday? If we look at the number of stocks made new 4-week lows yesterday, we see 52% of the S&P made a new 4-week low yesterday. Now, that is still bearish. That is not good. But in context of the prior low, that's 25% fewer stocks were at new lows. So to us, that shows that the selling pressure is slowing. It's not ending, but it's slowing, coming to an end.
Well, fair point. And for that, though, I want to take a look at tech. If you come inside here, you can see the NASDAQ is the top panel. The bottom panel is RSI, so the relative strength index. Anything below 70 tends to be on an oversold basis. So what does this tell you? Because tech has been very confusing. Some sell-offs, it's just gotten hammered. And then yesterday, it was one of the holdups. And last week, also after the sell-off, we saw tech rebound. How do you think about this?
Well, RSI is a very good tool that technicians use, and it kind of helps us measure the momentum of the market. It gives us a good idea of the magnitude of the most recent price changes. And again, we go back to October 11th, the most recent low. RSI for the NASDAQ composite hit 18, and anything below 30 we consider oversold. 18 is extreme oversold levels. To put this in context, we have not seen an 18 reading for RSI on the NASDAQ composite since September 21st of 2001. So that means this recent selling has been more volatile than the 2008-2009 sell-off. It's been more powerful than the flash crash. It's been more powerful when the U.S. debt was downgraded during the summer of 2011. So that powerful selling, we saw it's slowly starting to ease, because yesterday, as the NASDAQ retested those lows, RSI was not at a new low. So from the technician seat, we consider that a positive divergence. That means, yes, there's still selling pressure out there, but the strength of that selling pressure is not as strong as the prior dip. And typically, bottoms are made with these positive divergences. So we're not saying we're at a bottom, but we're saying we're closer to a bottom than we were on October 11th.